Before you fall in love with a house, you need to do one thing first. Get pre-approved for a mortgage. Without it, you're just window shopping. With it, you become a serious buyer that sellers and agents actually respond to. So let's walk through exactly how to get pre-approved, step by step. Step 1. Know your credit score before anyone else pulls it. This is critical. Most buyers let lenders run hard inquiries right away, which drops their score before the process even begins. At Alora Mortgage, we use a soft pull credit check first. Zero impact on your score, full picture of where you stand. Step 2. Gather your financial documents. You'll need your last 2 years of tax returns, recent pay stubs, 2 to 3 months of bank statements, and a list of your current debts and assets. Having these ready speeds up the entire process. Step 3. Calculate your debt-to-income ratio. Lenders want this below 43%. Add up all your monthly debt payments and divide by your gross monthly income. If it's too high, pay down smaller debts first before applying. Step 4. Choose the right loan type for your situation. FHA loans work well for lower credit scores. Conventional loans are better if your score is strong. VA and USDA loans have zero down payment options for those who qualify. Step 5. Submit your pre-approval application with a lender you trust, one who explains your options clearly and doesn't rush you into a product that benefits them more than you. At Alora Mortgage, we guide you through every one of these steps. Email us at aloramortgage@gmail.com to get started with zero pressure and zero hard inquiry. Subscribe, more guidance coming every week.